Hello, folks. Welcome to the Sense of Things. Another week of all kinds of crazy fun. Markets have been all over the fence this week. We're starting off the morning pretty good. We've got some good economic data that we heard this morning. We'll go over third quarter final read on GDP. Ron's got a bunch of great information on earnings, on drawdowns in the S&P 500 since the 20s. Lots of just good information that I think should be a good level set for a lot of us. So stay tuned. We'll be right back on in just a second. Hey, everybody. Welcome to the show. Ron, how are you, my friend?
Good, good. Certainly, it hasn't been a dull moment into the year so far, 22 days in, but, it was 22 days in. God, I'm
22.
losing
Yeah,
my
I
mind
know.
here. I don't even know. It's going so fast. But I don't know how your winter's been. It's been fairly mild here, but I will
We're
tell
getting
you,
ready to get ready to get whooped on over the weekend.
yeah, I heard. Yeah, it's coming to you and moving up to the
Yep.
Northeast.
Yeah.
Yeah, and everybody's sending me, actually, there's like school closures. I'm like, yeah, you guys can keep all that. I don't want any
Yeah.
of it.
No, I don't. Yeah. I have a feeling it's gonna not really be as bad as they make it, but we'll just I'm sure Austin will start shutting down somewhere around Thursday afternoon. It's all supposed to come in on Saturday and Sunday, but I'm sure Austin will start shutting down by Thursday. People are already buying out bread and toilet paper at the store, which I still don't understand that.
Don't forget the
In
milk.
input and output. No, it's just bread and toilet paper. That's it.
I
Input
got
output.
you. Yeah, when I saw the U.S. map of the weather, it looks like you
Mhm.
guys were going to be getting ice.
Yeah, that's typically what we get. We rarely get snow. We get ice, and that sucks because it's just sheer sheet ice, especially on the bridges and overpasses. And for some god awful reason, they have to build the world's tallest overpasses here in this area. No reason to, but they build these massive overpasses, so they're like a ginormous sheer ice sheet when you're going up and down them.
Gotcha. All right, you ready to get going?
Yeah, what do we got going on this week in history?
We got a bunch of stuff. I'm gonna tick them off pretty quick here. 1639, the first colonial constitution was established in Hartford, Connecticut, which I did not
Interesting.
know. Certainly, that was 140 plus years before we actually had the Constitution for 1776, but I thought that was interesting.
Yeah.
1905, the world's largest diamond found, 1.33 pounds. Oh, that's
Jeez.
supposed to be a period. 3.1. It is. It's 3,106 carat diamond discovered. Listen,
Good
I don't
Lord.
know about you, but that must have been one hell of a wedding night when that was given to the lady. That's all I'm saying. I don't know how she had to hold that thing with two hands.
I've obviously, geez almighty.
1908, Boy Scout movement begins. Now they've combined girls and boys. It's just called Scouts, which is a
No,
shame.
no, yeah,
A
but
lot
they're
of it.
still a Girl Scouts too.
Yeah,
That's the
but a
thing.
lot
It's
of them
like,
have combined.
yeah,
Yeah, it's
yeah, it's
unfortunate because when
yeah,
I was young, I went through Cub Scouts. I only started Boy Scouts, but it was fun. Not that I was
yeah.
a big camper and everything, but it teaches you camaraderie and whatever.
Mm,
It's one of those things where in Israel, you have to be in the army. I think when you're grown up, you got to be in the Scouts.
yeah. No, no, it was funny. My dad was an Eagle Scout. I was
Oh,
never a Cub Scout or anything like that. We were part of Indian Guide through the YMCA and stuff like that. But yeah, he was always like, because since he was an Indian or since he was a Eagle Scout, he's crap. I'm not doing anything with scouting because they're always going to jam him into everything at that point, and he just wasn't willing to make the commitment.
yeah, but you know what? I got to tell you, not much anymore, but when you see Eagle Scout on a resume or whatever, it's
Mhm.
like being in the
Yeah,
military. As hey,
yeah.
you completed something, you did something that not a lot of people get to do.
Yeah, it's only 1 or 2% of the people ever that stay in scouting and end up as an Eagle Scout. It's very prestigious, and back then I think even more prestigious. So
I agree. I agree. 1918, Ukraine declares its
huh.
independence, and it's been hell ever since.
Yeah, I was gonna say it's not really worked too well for them, but
1924, first Winter Olympics takes place in the French
Okay.
Alps. And at that time, it was known as the International Winter
Winter
Sports Week.
Sports Week. Okay.
1935, first canned beer goes on sale.
Huh.
Kruger's Finest Beer and Kruger's Cream Ale from
Cream
Richmond,
ale.
Virginia.
Blech.
Yeah, I've never been a beer guy. I'm a vodka tequila person if
Yeah.
that's my choice. But that was interesting. But if you remember, I think it was in the 20s, well, maybe it was the 30s that Coke went to bottles and their
Hmm.
sales took off.
Yeah. Yeah. So it was the opposite direction for canned beer and all that.
Yep. 1945, Auschwitz
Yeah.
is liberated.
Wow.
1971, Manson and his followers convicted of murder.
And they just kept shoving Charlie back in the hole every 4 years.
Yep.
He'd pop up
And
and then go right back.
Roe versus Wade is
Huh.
decided.
Wow.
And the debate continues.
Yeah.
1973, President LBJ dies in Texas. I had looked this up. There was a 3-year period where we lost 4 or 5 presidents. It was
Yeah.
Eisenhower, Truman,
Yeah.
LBJ, and I think there was a fourth. I can't remember. It was all within a 3-year period or a 4-year period of time.
I think it was just those three, if I remember
And he was
correctly.
young
Yeah.
too. He was in his 60s, I think.
Yeah, but he drank like a fish and smoked cigars, and the man ate
Typical
bacon at
Texas
every
guy.
yeah, the man ate bacon at every meal. You just can't do that.
No. 1976, the Concorde supersonic jet takes off from
Yeah.
Heathrow Airport, and
Yep.
it lasted 25 years. I think it was 2001, 2002 was the last flight.
Yep. After that one blew up and
Yeah,
or
and
crashed
actually that
and
was it hit something on the runway
yeah, piece of
and
metal on the
it shot
runway.
up into the fuel tank on takeoff. And then,
Mm.
anyway,
Yeah.
1977, I did not know this. Carter
Huh.
pardons draft dodgers.
Okay.
I did
And
not know that.
that is shocking to me because he was a nuclear sub commander. So that was shocking to me.
Yeah, whatever.
Yeah.
Look, you're in the military. I know, I know how you would feel against this, but
Yeah.
I did not know that.
That's crazy.
1984, Apple's iconic 1984 commercial airs during the Super Bowl.
Yeah.
This is when the Super
Awesome.
Bowl, look, in about 10 years, the Super Bowl will probably take place in April or something. Who knows what's going
Mm,
to happen?
yeah.
All right, 2009, Toyota, I remember this, officially
Mm,
passes GM as the planet's biggest car maker.
wow.
I don't know if that holds true today, possibly.
I tell you, the South Korean companies are catching up pretty dang quick.
Yeah,
Yeah.
Kia is definitely
Yeah,
gaining
you
a lot
see
of ground.
Kias and Hyundais around way more than I see Toyotas even. And they build the trucks here in Texas, in San Antonio, but I see a lot of Toyota trucks. I don't see as many Toyota cars, I think, anymore as I see Hyundais and Kias.
Obviously, in the mid 80s, the Yugo really didn't go
Oh,
very
yeah.
far. Those things were like little matchbox death traps.
Yeah, pretty much. Pretty
Yeah.
much.
All right, here we go. From FactSet, took a little piece of the article here. The earnings is supposed to be possibly double-digit growth 5 quarters in a row, which obviously
Mm,
is a
yep.
good sign, but is it ahead of its skis in valuation with the market? Up for
Mm,
debate. Just very quickly, we got the two charts on the bottom. The one on the left was the estimate versus actual, and you could just see in the last 5 quarters, the actual just blew away the estimates, which
nice.
again is where you and I always come in laughing our rear ends off at the market strategist and the analyst that you don't have a freaking clue. Which it's the funny thing, it's like you and I trying to predict where's revenue going to be in the next quarter or
Yeah.
a year from now. They
Mm,
have the smartest people and they know their businesses inside and out. And
yep.
the companies don't know, and the analysts have no
Yeah.
clue.
Absolutely not.
So literally, it's like literally blindfolded throwing a dart. And
Yeah.
this is where you and I always have some fun with. But
It's just then my favorite is the stock gets pummeled, the earnings reports down, and then blah 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 analyst moves such and such from 250 to 256 for the projection up to 256. Okay, they just had the worst quarter they've ever had, but you still think the stock's going to go up. Okay.
yeah, I remember when I was early on, I remember watching CNBC, and I always said the best way to watch CNBC is on mute. And I
Yeah.
remember they had somebody come on, I can't remember which company, and they're like, the stock got hammered. Like they call it hammered. It's down 5%. It got
Yeah.
hammered. And they were like, they were expecting revenues of 202 million. They only hit 199. Ah,
Yeah.
terrible quarter.
Oh, just
Terrible
awful.
quarter. I'm like,
Just,
are you
you need to
kidding
pummel that
me?
stock
They missed
down.
it by 3 million.
Yeah.
And I like you just you anyway. It
Yeah.
just kills me like how they come out and oh, markets in turmoil. It's down 7%. Markets aren't in turmoil. Anyway, all right. Real quick on this one. So this one is earnings expectations by sector. What is either in line or above or below? And I always find it interesting. The consumer discretionary, it's gotten hammered since
Yeah.
the height of COVID, where people are still buying, but they don't have the margins anymore. They were able to
Mm,
increase prices back then. They don't have the margins today.
yeah.
So look for Oreo cookies to get smaller and the prices to go up. That my I have the we have the remember that we have the underwear indicator, the lipstick indicator.
I forgot
I
about
have the Oreo indicator.
I forgot about the underwear indicator.
I forgot what was it when men buy less underwear, that means the economy's going in the
The
crapper, no pun intended.
Yeah, literally. Yeah. I'm like, okay, men don't buy underwear. It's just
Mostly, yeah.
until it just falls apart, we just don't buy underwear. So I don't get
Basically.
it.
Basically. All right. The last slide here. We always talk about the broadening of the market and making sure that you're diversified, more balanced. This is just a
Mhm.
nice little chart from Financial Fables. I like their stuff. They're just showing growth versus value. And really, on the world index, in 2016 was the last year since 2009 where value outperformed. But
Mm.
certainly, depending on your risk tolerance, how close you are to retirement or into retirement, you don't want to be too weighted to growth. And I just thought this was a good
Mhm.
chart to show.
The year was it 2021 that it outperformed? Well, it just sucked less. It's like it didn't outperform, it just sucked less that year.
And actually,
So
it was a shift. It was
yeah,
just a shift
yeah,
because people just, the smart people were like, oh, you know what? The economy will return this or that. We didn't know in March,
yeah.
April, and May
Of
of
course not.
2020.
Yeah,
And
of course
the
not.
last chart I have, I thought was important because in the last 16, 17 years, people have just gotten too spoiled with the market going up week after week, month after month. And that is the expectations of the market when it comes to how often, and this is since 1928. I snagged this off of a LinkedIn post.
Mm,
94% of the years, if you look at it this way, in the last 97 years, 94% of the years expect a 5% pullback. 63% expect at least one 10% pullback. And again, going back to our stats from last year, you don't get 3 years of double digit gains that often. And we know what follows that.
mm,
Expect at some point there will be a 5% pullback this year, maybe a 10%. Doesn't mean we may not be higher by the end of the year. But again, there's no reason to freaking panic on
yeah.
a 5% pullback. Your
Well,
thoughts, because this just curdles my blood here.
I think it's so funny with my clients. If things are rolling along, it's all great. But boy, I tell you, any kind of a pullback, what are we doing? We're not doing anything. We might make a little adjustment in the portfolio on the monthly rebalance, but I'm not doing anything to try and scramble and do these adjustments and all that. It's just part of the deal. And if you want to play, you got to be on the field. You can't
Yeah.
not be there,
Well, there's
and
all
you
those
just have to realize
statistics.
it.
There's all those statistics. If you miss the 10
Yeah.
best days in the market, you know how that is.
Oh, I know. Yeah, and I think that's a reality. If you do miss those just short days in the market, you're going to be up a creek. You've got to stay invested. And it's been interesting to watch. I always watch IBD, Investors Business Daily, and they've got this indicator that shows what you should be invested, whether it's 100% in the market, 80 to 100% in the market, or should you start pulling back? And Monday, the market was down and that thing jacked over to, oh, it should only be like 60 to 70% in the market. I'm like, dude, I'm not managing my portfolio like every day and adjusting all this stuff around. It's crazy. If it's a
Yeah.
trend and we're going in a specific direction, if we breach a 50-day moving average and that type of stuff for 3 days, yeah, I'm going to make some adjustments if we need to. But yeah, it's like these 1 day or even 1 week crazy moves. Oh my God, we've got to do all that.
Insane.
It's just nuts.
Yeah, can't get emotional.
Yeah, no, and that's why the big boys don't change their underwear or whatever. I don't know what it is, but
Okay, I haven't heard that expression. Maybe they're
all
wearing two.
right.
Maybe they're wearing two pairs just in case.
Yeah, maybe you got to double up on that stuff. All right, let me share my screen here. Let me change. Is it showing like me and the screen on
Yeah,
there
yeah,
at
I
the
did
same
a
time?
side by side. Make your slide bigger.
Yeah, hang on. Just let me go back and change it again. This thing has gotten wonky, man. Okay, as background, side by side, over the shoulder. I just want content only. I don't need me on the screen. All right. And let me make this a little bit bigger and go back to what we've got going on. Yeah, a little easier to see.
Yep, thank you.
Okay. All right. So today, this week has been basically nothing when it came to anything economic wise prior to today. It was a lot of just bill announcements and a few things from some of the Atlanta Fed and things like that. The good news this morning, of course, was GDP. So third quarter GDP, and this is the final read, what they call the final read. So for those of you that are new to the show, we talk about this all the time. When the Fed does, or when they do the GDP, they do the GDP 3 times. They do what they call the reads, 3 reads during the quarter, and this was the final read. So this is the final actual number for Q3, which was 4.4%. The economy is growing like crazy. I would venture to say, and I'm going to call it here, I am gonna bet money that we're gonna be probably closer to 4.6 to 4.7 by Q4 when we start getting the Q4 numbers, because this has been accelerating like crazy and the market is firing on all cylinders right now, or the economy's firing on all cylinders. So it's moving in the right direction. This, you figure Q3 too was that time when we're right in the middle of the beginnings of the shutdown and everything like that may have a little bit of effect. The shutdown may have a little effect on Q4 GDP, but Q3, we're rocking. So good news. Another piece of the pie, jobless claims came in 200,000. Consensus was 205. I heard 210 this morning when I was listening on the radio. Ongoing claims about 1.8. This has been good. Now, the problem with this all has been, even though this is good and this is good, the hiring side of things has not been too robust. I think, especially the last year of the last presidency, there was just, Ron and I would talk about this all the time. You'd have, oh, yeah, we have 200,000 jobs, and then you dig into it and it was all government hires. So it's okay, these
Yeah,
are not
yeah.
productive jobs in the economy. They're just people that we're paying to do jobs within the government.
It was the biggest
Um,
piece of the pie.
yeah, and that's gone away. Pretty much government hiring has really begun to be focused on very specific areas like in the Homeland Security side, but not as broad based. We're seeing some anemic growth, and I think we've seen anemic growth for quite a while. It was just covered up by the government hiring in the private sector. Although there's good, there's still that weird disconnect where we're not seeing the hiring side of all this. So I would say if we see that, we can see GDP even take off more. What's your thoughts, Ron?
I don't know if the tariffs have actually gone through the system. Also, this is Q3. So
Yeah.
this is already 3, 4 months old. There's so many factors to this. They're talking about 5% GDP growth this
Hmm?
year. Like I said, there's a disconnect and a separation between the economy and the market.
Yeah.
And I think that this year, I think will take us in one of two directions. We'll have to see. Because
Mm,
I said this before, if the GDP is so good, why do we need to lower the Fed rate? Because if
mm,
you lower the Fed rate, that's putting rocket fuel into the economy, which is great short term. But at some point, rocket fuel burns faster than regular fuel. And then we're
Yeah.
going to get inflation, and then we're going to have other problems. I'll be very blunt. I'd rather just see us go nice and easy, 2.5%, 3%. Just nice and steady,
How
grow.
much?
Because again, too much, you do this, right? You're going to drop.
Yeah.
And look, and this isn't just me. This is history, and this is stuff that repeats itself. It doesn't rhyme.
Yeah. I don't know. Once again, the I personally think the tariffs are in the market. We've collected a lot of them. We've paid a lot of them outside of the country. I don't know. I just see there that belief that if we have growth, we're going to have all kinds of inflation and all that. I just don't buy it. I think that's old thought and it's not worked anytime we've seen it in history, or it's a rarity that we see growth and then we see inflation as a result of it. We see
Well,
inflation, I personally think, a lot of times when the government tries to juice the system and throw money in the system, that's where we see a lot of inflation. But yeah.
yeah, I'll tell you where my biggest conundrum is. And I said this when Biden was president, and I'm saying it
Mm,
when Trump's there and whoever's going to be next. If the economy is that good, why are car loans defaulting?
mm,
The credit card number keeps, if it's that good, that
yeah.
should be going down. People have more
Mm,
money in their pocket, but the problem is they're not paying down their debt, they're
yeah.
spending
They're
more.
spending
So
more.
in
Yeah.
me, so for me, this is a false sense of everything is great because people are spending money, but they're
Hmm.
spending money that they don't
That they
have.
don't have. Yeah.
So if all that debt was lower and car loans weren't spiking, also, by the way, business bankruptcies are spiking.
Hmm.
So
Yeah.
if it's so good, why are all those things trending in the wrong direction?
And I think a lot of in the business space, one of the things that hurt business, and this is from speaking from somebody that, has had SBA loans and all that. Most loans in the small business space are variable loans. And one of the challenges is I think a lot of people borrowed money in the early when rates were incredibly low and they're paying it off. And all of a sudden now those rates shot up to 9, 10% in a lot of cases. And now you get behind. And I know in my other non-financial businesses, we saw really last year for, I would say, 8 months of last year, the small business owners we work with just weren't spending any money at all. They were
Yeah.
just completely, okay, I can't spend any money. So that trickles out into the economy, into other small businesses that sell to the B2B type of businesses. You saw that. And I heard that from friends that had businesses as well. Everybody was just in shell shock and didn't know what to do. So,
And for me to put a bow on it,
yeah.
again, this is just the rant again, but if you lower interest rates, people will borrow, meaning they're going
Hmm.
to keep spending
Yep.
money they don't have. Hopefully, they can pay it off. The second thing is me, I've been ranting about the credit card interest for years, and I think it's a great idea to cap it. But
Hmm.
if you don't cap the credit limit,
Yep.
they're gonna keep spending. They're
Yeah.
just it just
But yeah, I honestly think that's the although I totally 100% agree that the credit card rates out there are usury at this point. I've said this for multiple times on here. It's just straight up usury. We used to have usury laws in this country that said you couldn't charge somebody so much, and they've just let the government's just let credit card companies just do whatever they
yep.
want. And no matter when rates were high and then they pulled back down, they just kept at it where it's at. The unintended consequence that I would imagine is the people that probably need the credit most are going to get hurt really bad if we move those rates down because a lot of these credit card companies are just going to stop issuing credit cards
Right.
to people
Which
or
may not
more
be a
credit.
bad thing.
It isn't a bad thing, but it's you could see them also coming in and saying, okay, we're not going to extend credit to you. We might even pull back your credit that you have, which, that I think, once again, not necessarily a bad thing, but if you're used to doing that,
Yeah.
that's a major change and it's a major effect trickle down through the economy.
You heard what the bank's retort was, right?
Mhm.
To not getting it. They said it'll hurt people's credit ratings. And I'm thinking to myself, if you limit
How?
the credit,
Yeah.
that means at a lower rate, they could still pay the same amount, but now they're
Mhm.
paying down
Yeah.
the interest and the principal. It
Yeah.
should help their credit
It should
rating.
improve their credit.
It's BS.
It's once again, what they'll do
But
is
but
they'll
if they
be like,
double their
okay,
credit limit, it doesn't matter.
yeah, yeah. That's the thing is, oh, okay, well, if you do that, then we'll have to pull back credit from people, and that will mean more money is, or
The credit already sucks.
yeah, your credit sucks because you're all the way up there anyhow, so it doesn't matter. But yeah, I mean, at least they have a fighting chance of hopefully paying some of that debt down. The reality is most people won't. That's why there's people
Yeah.
like us that try and guide them and point them in the right
The
directions.
very last point that they're trying to make, which is complete BS, is it'll hurt access to credit. So you're going to continue to gouge them for 22 to 26% because you're
Absolutely.
doing a good deed by offering them credit?
Offering them credit. Yeah.
What?
Giving them enough credit to hang themselves even more to where they're never going to get out of debt
No.
at that point, especially at 28, 30%, whatever. Yeah, I totally agree. It's one of the few instances where I'm like, you know what? You guys you have been allowed to do whatever you want to do, largely because they're all based in Delaware, and you've had just ridiculous amounts of money that rushes out of Delaware to other states to pay off politicians. And I'm like, no, I'm sorry. You've outdone yourselves at this point, and you've been allowed to do that. And I think they do need to be curtailed. We need to bring back usury laws because it's absolutely ridiculous.
I'm going to make a quick prediction and we'll wrap up.
Yeah.
It'll probably be a cap of 15.
Yep. Which
I'm just saying.
from 30 to
That
15?
I understand.
Yeah.
I understand. But that's what's probably going to end up happening is
Probably.
the banks are still going to make money at 15.
Of course.
So
Yeah.
I have a feeling that's what's probably going to happen is there will be something because he needs to do something before the midterm for the consumer like this.
Yep.
And they'll probably do a 15% cap. So that's my prediction.
Yeah. And that's true Trump fashion. He's gonna punch you in the face to the left, and they're gonna be over here, and then they end up somewhere in the middle. And
But here's the funny thing about the 15%. Remember, we've shown the charts. Maybe we'll do it next week. That was the average for 30 years.
Yeah, so you're just getting back to
Doesn't
where
matter.
it was.
That was the average. Remember, it was 14 to 16% for 30 years.
Yeah. Yeah. And then all of a sudden,
And they made
oh
money
my
then.
God. Yeah. Yeah. Oh, we can't even make money at that point, and people won't have credit. And no, you know what? You need to go back to what you were before. You were making money, and people actually had at least a fighting chance of getting out of debt at some point. Probably not, because they'll just keep spending money.
Yeah.
So.
I hear you.
All right, brother. Thanks, folks, for joining us. Hopefully you enjoy these shows. We get our spirited conversations and look forward to seeing you guys back here the very next time.